Gautam, good morning. Thank you for joining us. Uh, well, currently, half a dozen conferences are on. How will your conference be different, and what is the India pitch like?
So what we're doing this time is obviously trying to get some interesting themes out, which is topical in the Indian context, and not just from the macro perspective, but also in the context of sector-specific themes like what's happening in the digital era, in the IT services space, in the banking space, the entire thing about financial inclusion, NPLs, and even the digital banking side. Consumer, the big move towards herbal, what's happening there. And then we tie it in with what's happening on the macro front, including what's happening in rural India, what's happening from the political perspective post the Bihar elections, and then some of the government bureaucrats, etc., become part of this event to give enough insight to investors.
But Gautam, tell us what the mood is like with regards to India. Considering post the Bihar election outcome, it's been a bit of a question mark on how the government is going to go through with the reform process. And of course, the ever so big lingering Fed lift-off, God knows when it's going to happen. Is the mood on India still excited, or have you tampered with your overweight stance in India now?
So we never bothered about the Bihar elections per se, beyond a couple of days sentiment impact. And we can see signs of that already, that it will not very unlikely to derail the broad reforms agenda of the government or broad policy making direction. The mood among investors, the simple point to highlight is that we do have a record attendance in terms of investors coming from outside India. So overseas investor attendance is near record levels we have seen in recent history. And this includes investors who are looking at India for the first time. So that indicates that the interest in India is still very high. In India's relative attractiveness still stands out, and we're still maintaining our overweight stance on India from a GEM perspective, from an APAC perspective.
If the India relative pitch is so strong, what explains the recent FI activity? What we've got this year is perhaps $4 billion. That, considering how much of global liquidity is sloshing around, some would argue is actually chicken feed. And this is much less than what we've got in the last 3 years. So if India is the first port of call and the best destination for global investors, because inflation is low and growth is coming back, how come foreigners who've been a fair weather friends, they've turned their back towards us?
So few simple points there. One is if you look at what happened to GEM. So GEM has seen record outflows this year. So in that context, India getting $4 billion actually buttresses the point that India is a relatively a favorite market for investors globally. Secondly, if you look at India's last few months, the expectations were just too high after the elections last year when we saw record inflows. Obviously, those expectations have not been met in terms of near-term data points, and unlikely to be met in the next 6 to 12 months as per our view. So that's the reason why some disappointment has happened. And lastly, positioning. Investors even now, the overweight on India is near record as far as benchmarks are concerned. So positioning is working against India, and we saw a tactical rally in emerging markets like last few days and weeks. You saw India not really outperforming. So these are the reasons why India has kind of appeared in absolute terms sitting here, not doing as well as one would have thought. But compared to emerging markets, is still doing very well.
So Gautam, I wanted to understand where is the consensus? Since you mentioned that the number of first timers to India are large, what is it that you are recommending from the Indian basket, the top themes, and where is it that investors are willingly lapping up those ideas? Whether they buy or not is a separate thing altogether, but where they are buying the argument.
So again, yeah. So India has multiple themes, as we all know. There's a strong domestic growth story where the entire domestic cyclicals are well placed, from financials to the broad consumption basket. While tactically we are neutral on staples and discretionary, given the outlook we have for next 6 to 12 months on urban demand recovery as well as macro recovery versus expectations. But longer term, that's definitely a theme which is very closely linked to India growth story. And then you have pockets like pharmaceuticals, which is unique to India. Then the entire story about exports, make in India, which can work well for India for the longer term. So there are definitely interesting ideas out there from a longer term perspective. And a lot of investors have come into India looking at India from that long term opportunity.
The The most powerful theme for Indian economy and Indian markets is that rates have come down, rates will come down more, consumer will make a comeback and discretionary spending will pick up. And typically when consumer discretionary spending picks up, autos and automobile stocks, they tend to do well. But in your classification of sectors you like and sectors you don't like, you are underweight autos. Why is that?
So we are underweight auto two-wheelers, we are neutral auto four-wheelers. And consumer discretionary and staples, both we are neutral. Primarily because the point you raised, we believe in part of it, we don't believe in the other part. So we have been arguing about a very sharp rate reduction cycle in India. So our call was 200 basis point lower rates we made last year. We have seen 125 basis point already done. We expect another 75 basis points over the next year or so. So that call still stands. But we also are making a call that the recovery in demand from consumer discretionary point of view is likely to underwhelm investor expectations on two fronts. One, we don't see urban demand recovery to be as strong, or in fact will take much longer than what is commonly believed, because the effect of lower inflation driving real incomes is missing the entire point that nominal income growth has also come down. So there's no real income growth as such which we are seeing right now. And the second point is a lot of hope is riding around pay commission, which is due Jan 16, and we have been publishing on this that pay commission again is likely to underwhelm investor expectations, because we don't expect the government to implement pay commission which leads to any even a small damage to the fiscal balance. And given the fiscal situation which we have, and given commitment to reduce the fiscal deficit over the next 2 years, the room for having meaningful and immediate implementation for pay commission is limited. So we see the possibility either it gets delayed or the implementation is staggered and a much lower hike. So we already saw some press reports yesterday indicating a 15% hike, versus the number being talked about was 30% a few months back. And even that 15%, if the government implements, could possibly be staggered over 2-3 year period. So the impact on the broad macro from a consumption perspective will likely underwhelm investor expectations. So that's the reason why we are neutral from a 6 to 12 month perspective.
Well, you pretty much preempted our next question, Gautam, and thank you for that. But very quickly, the last question then, and we ended with the macro. You already answered about the impact of this pay commission on the consumption. What about the government finances? Very quickly, does it have a meaningful impact, or you think the government will take it in its stride, even if it's 15%?
So that's the point. Government finances doesn't have space to absorb even a 15% increase, given its commitment to fiscal consolidation and FRBM targets. And if you remember one last point in this entire debate, from a markets perspective, unlike historically, India has a huge amount of bond investors in Indian markets now from overseas. And bond investors care a lot more for fiscal deficit, inflation, currency, than just a short-term impulse to growth. And you don't want to scare those investors away also.
Gautam, so good chatting with you, and enjoy your conference. Have a good one.
Yeah, thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.